Hello, and welcome. Great news. Version 4 of AITPPropTrader has been released. My objective with the new features I included in version 4 was to make it the best automated trading software or automated trading system that's currently available for NinjaTrader. I truly hope you as a futures trader benefit from these new features. In this video, I'm going to explain what these new features are and demonstrate them in action for you. I'm going to run a total of 10 backtests and explain the logic behind the new features, so please ensure you watch this video in its entirety, as I believe you will find it to be very helpful. The two new features are based on excellent feedback and feature requests that I received from clients. The first feature is the ability to filter out potential bad trades by choosing the market condition you're in prior to any trade executing. And the second feature allows you to dictate what the price range of the last 2 hours is prior to you entering a trade. This feature is extremely helpful for traders who want to ensure the risk-reward objective is aligned with the market they're about to enter. In my view, these two features can be of tremendous benefit to any independent trader, whether you're managing your own money or you're trading prop firm money. Let me break down these two features one at a time, but before I do that, I'm going to start loading the back tests as they're going to take some time to run, and while they're running, I'll cover these features. Okay, I have 9 templates that are ready to be loaded. 6 of these are for NQ, 2 are for the SPOOs or ES, and there's 1 for RTY. I'll just load them in order here. So Monday, and that one is for NQ. And let's ensure that we have at least 2 ticks of slippage. We do. For NQ, I typically use 2 ticks of slippage. For ES, I'll use 1. For RTY, I'll use 1. So let's go and run this one. And we're going to keep loading these as one at a time, really, on the tabs that I have open here, the strategy analyzer tabs. So we loaded Monday. Let's do Tuesday. For Tuesday, we have a couple of SPOOs. So I'll do both of them, okay, and then I'll explain what they are later. So this one's going to be for the SPOOs. And let's again make sure that we have slippage. We do, 1 tick. So this is for both market conditions and the strategy's price action price level. So let's run this one. And then we have another SPOOs example for the templates. So let's go and load that one as well. And that is when there's no market conditions. So, excuse me. Let me go and load that in. Okay, that's for Tuesday. Let's make sure we have slippage. It looks like I have 2 ticks of slippage for this one. Let's reduce this to 1 because this is for ES, and 1 is typical for ES. So that's, of course, if you don't have a bunch of indicators on your chart, which I don't. I try to keep my charts as barren as possible. If you do have a bunch of indicators loaded on the chart, expect some latency and expect there to be additional slippage if you have a bunch of indicators. So you may not just get 1, you may get 2, 3, even 4 ticks of slippage if you have like 15 indicators loaded on your chart. So I don't personally recommend doing that in my view. So let me go and run this guy, and we have SPOOs. And then let's go to Wednesday. So we have Monday and Tuesday loaded so far. Let's do Wednesday. For Wednesday, I have RTY. So that's the Russell 2000, the E-mini. Okay, and that's for Wednesday. And again, most of these are going to be that time frame. So since I'm in Pacific Standard Time, I'm in Los Angeles, that's pretty much almost all of RTH. So 6:30 till 12:30, it's 29 minutes before I flatten everything. In my templates, I have that selected. That's optional. 12:59 my time, Pacific Standard Time, it's going to flatten everything. So that's RTY. All right, this one has 2 ticks of slippage. I mean, generally for RTY, I'd leave 1, but I'll just leave 2 since it's there. But I'll go and run it like that for RTY. That's Wednesday. Now we're on Thursday, and for Thursday I have several that I'm going to be loading here. I have 3, I believe, for Thursday. Yeah, so let's just start with the bottom one and work our way up. So this one, they're all for NQ, but they do different things. Okay, so slippage is already there. So let's go and load NQ. Okay. So that's Thursday, 6:30 to 12:30. It is long only, obviously. So let's go and run this this back test. Okay. Oh, this is for. Looks like I've gotten 2 years here. Just to save time, I'm gonna load one of them. If you guys want to see the full thing, I can certainly run it for you on a Zoom call and a more detailed look. But for demonstration purposes, I think 1 year or this full year is, I think, good enough. So let's go ahead and run the other one. So this is the second one. And let's do NQ. Again, 2 ticks of slippage is there. Okay, this one is from 5. Okay, and it's both directions. So let's go and run it. NQ. And then we have another NQ. That's the final NQ for Thursday, which is this one. This one, I've got all 4 strategies selected. Okay, so that's an interesting twist. 6:30 to 12:30. NQ. We have enough slippage. Okay, now let's do finally Friday. I have 2 for Friday. They're both NQ. So I'll start with the bottom one first. NQ. No, I'm not going to do 1 tick of slippage for that. That needs to be 2 for NQ. Alright, let's go and run this. No, I don't want to run. That's going to take too long, so let's just run this full year. And again, if somebody wants to see the full 2 years or what have you, I'd be happy to demonstrate that on a separate Zoom call. Alright, this is the final one. From the templates, at least. It's the final one. Alright, that has 2 ticks of slippage. 6:30 to 12:30. And that's the final one. While those back tests run, let me break down the 2 new features in AITPPropTrader version 4. For choose market conditions, it is essentially based on a custom add-on indicator that I built, which I'm calling Market Condition Identifier. The algorithm for this add-on indicator is based on the slope, linear regression, ATR, Bollinger Bands, moving averages, and of course, standard deviation. In all trading, there are essentially 4 market conditions: bullish or trending higher, sideways, volatile, and of course, bearish or trending lower markets. Since AITPPropTrader is a day trading automated trading system, we have to put a limit on the higher time frame that we're checking to determine the potential market condition we're in so that it's aligned with day trading objectives, which for this automated trading software is run on the 1-minute chart. The higher time frame can range from as little as 2 minutes to as much as 240 minutes, so a 4-hour chart. In my view, each of these conditions may provide traders with higher probability trades, as knowing the market condition you're in prior to trade entry may reduce the number of bad trades. Just imagine how your monthly P&L will look if you had eliminated just half of your losing trades. For the Choose Market Range feature, you can separately select long and short trades and predetermine your preferred range that is aligned more closely with your risk and reward objectives prior to you even getting into the trade. Knowing in advance the market or price ranges gives you far more granular control over your trades. The minimum and maximum ranges you see here are for the last 120 bars or the last 2 hours, since this automated trading system for NinjaTrader is designed to be traded on the 1-minute chart. The minimum range is the least amount of ticks that the market must have moved in the last 2 hours, and the multiplier is the multiple of that number. So if you designate the minimum market range for the last 2 hours to be 30 ticks, then if you put your multiplier at 4, the maximum range would be 120 ticks, 30 times 4. How is this helpful, you ask? Well, imagine if you had a stop of 30 ticks, but the market range you were about to enter had already moved 430 ticks in the last 2 hours. Let's assume NQ was red hot that day. What are the odds that your 30 tick stop gets taken out relatively quickly? Pretty high, right? You can eliminate entering trades in markets that are outside the reasonable bounds of your stop price, thus potentially reducing the number of bad trades. Okay, let's take a look at all the back tests that we ran. So the first one that we ran, I'll go through these very quickly. That's the first one. That's the second one. That's the third one. That's the fourth one. That's the fifth one. That's the sixth one. That's the seventh one. That's the eighth one. And finally, that's the ninth one. Okay? So each of these had their own parameters selected, their own days selected. You see here in these back tests, Monday through Friday is represented, but you can easily tell also that there are, as I've said in other videos, and those of you that have had Zoom calls with me, we've probably discussed this also on our Zoom calls, that I believe that there are good days and bad days to trade any instrument. I repeat, there are good and bad days to trade any instrument. Okay? So essentially this was Monday, but all of these have their own features. Some of these, for example, the market range is selected and only price action, price level is selected. Other ones have a lower market range selected, like this one versus this one. Okay? Actually, this one has no market range selected. It has, this one has market range selected, but this one has no market range selected. Okay? So this one had market range selected. All right? You'll see the max drawdown versus the total net profit. You see some of the other metrics there. But this one has no market range selected. Even though you see the numbers there, it isn't checked. Okay? It isn't checked. So you're going to get a lot more trades. Okay? And also, let's take another distinction here. This one did not have the market condition selected, but this one did. Okay? Let's move quickly. Again, if anybody wants to see a more detailed look, obviously you can rewind this video and take a look at it yourself and slow it down and study it. But if you wanted to take a even more closer look, please arrange a Zoom call with me, and we can certainly do that and go deeper into the numbers and deeper into the back test. And I do have another video where I describe the accuracy of back tests for the strategies that I run, because I only run back tests, and everything that I build are on minute bars, not 1 minute bars, but minute bars in general are accurate in NinjaTrader if big if you're using a on close calculate in your strategy. So if your strategy is being calculated on bar close, then it becomes accurate, because every data provider, including NinjaTrader, any data provider that you go to, they have OHLC data that they're storing, open, high, low, and close. And as long as you're doing the calculations on the bar close and you're using a minute bar, it becomes very accurate. Okay? So that one was, this one was a very tight one. This was Wednesday. Okay? As I've mentioned, there are good and bad days to trade any instrument. Yes, the max drawdown is low, but risk and reward go hand in hand. This setup is taking less trades because it's pretty tight on the, well, it's not that tight on the minimum range, but this is pretty tight as well. When you look at this from a holistic perspective, you look at the higher time frame, that you're only looking for bullish trades. Okay, let me quickly discuss this part. So if you're looking for only bullish trades, it doesn't mean that when you're looking for long trades, it doesn't necessarily mean that you should avoid sideways price action, because remember what happens after the market runs a little bit sideways. Okay, there's usually a breakout or a breakdown. Of course, it can remain sideways for a while, but usually, typically, there is a breakout or a breakdown. Same is true of volatile. Volatile means that you have essentially a bigger bar than normal. Okay, so that's considered volatile in the way I've done things. And so you could select technically all three of them. But what I said is, you know what? Let's be more granular, more specific about the way we're going to look for these trades. Let's only look for a bullish setup over a 15-minute time frame. So over on the higher time frame, on the 15-minute chart, we're looking for bullish bar before we get in, okay? And then we're specifying that it has to move at least 60 ticks in the last 2 hours and as much as 8 times that on the max side. And we're looking for the price action price level. And we're doing that for Wednesdays all day, but it's only for long. So that became very sort of a tighter setup, okay? And this is only for RTY, all right? So we have to get that set up on RTY, and RTY doesn't have the kind of movement, price movement that the others will, and so like NQ, and so you're going to get less action. But again, you're going to have good and bad days to trade any instrument, and there's no rule, guys, that says that there are certain days that you shouldn't trade at all. There's no rule like that, okay? So there are, again, I repeat, in my opinion, good and bad days to trade any instrument, and there are days that you may want to just sort of sit out and do something else, okay? That's just my opinion. All right, so this is Thursday. We had several Thursdays. They have their own conditions set up. Some don't have short, some do. So this one, they're both NQ. Actually, all three were NQ for Thursday. This one doesn't have it. This one does not have short trades, but those are your conditions that are set up, okay? This one does have short trades, and it's starting earlier, okay? But there's going to be a difference, okay? Take a look. So this one has market conditions. Those are the trades. This one does not have market conditions. Those are the trades. But this one has a different market range than this one does. Okay? Does that make sense? All right. So let's keep going here. So for the sake of time, this is going to be a long video, it looks like. But please watch it to the end, guys. Okay? Because there's one more thing that I'm going to show you. So this is still Thursday. Okay? This is, only long. And this is Friday. This setup is only long. Just take a look at it here really quickly for those that are going to be rewinding things. Okay. And then this is the final Friday. It's long and short. All right. So we just went through all of the 9 templates that I ran backtests for. I'm going to do one more for you guys. And for the final demonstration of version 4, this automated trading system for NinjaTrader, I'm going to essentially grab data and run that data to train the AI part of the system, the AI trend predictor, so that the machine learning portion of it gets trained with the data that I'm about to run on it. So I'm going to run the data for this full year. Okay, that's over 7 months now. Almost the 8th month is complete, so that's plenty of data. So let's run it for Tuesday. Let's call it something like demo. Okay, and make sure that whenever you use Data Grabber, okay, which comes with the suite of tools that I offer you, make sure that this is 60 minutes or else it won't work. Okay, guys, it needs to have 60 minutes. So let's run the data because we're training it on the hourly data. So now we can grab the data that we just ran. Okay, all I have to do is hit refresh, and you're going to see a demo file in here. There it is. Okay, it automatically appends the instrument, the expiration date, and the time, the date and the time as well. So let's go ahead and rename this. Well, I'm not renaming it. I'm just clicking on rename so I can control C it, so I can copy it. Okay. Next, I'm going to paste it in here. This is the AI trend predictor, and I'll put CSV. All right. Let's go ahead and grab this whole thing and take a look at it. So from all the days that we're interested in, it looks like that's the one I'm going to be the most interested in because it's at 70.59%. And I've said this in other videos as well. In my opinion, you may want to look for, or one may want to look for, a 60% or higher probability here on this right side. Okay, the left side is what we trained the machine learning tool on, and it grabbed the data that we fed it just right now with that CSV file, and it made the predictions. Okay, this, everything to the right of the dash, is a totally different library. It is a statistical library that is essentially running a back test internally and trying to see if at the 7 o'clock hour, for all the days that we fed it, for all Tuesdays since January 1st until today, August 26th is what we are today. It's early morning, August 26th. Essentially for every single Tuesday only, it ran it and it saw that in fact it was higher 70.59% of the time if you go back in time and check every single Tuesday at 7 o'clock. So it was up. Okay, so based on what I just said, some traders, or some of my clients I should say, have told me that they are essentially not really taking this into consideration. Some are following that 60 plus rule, and some have their own rules. Some are totally ignoring it. Okay, but I'm going to follow it, and I'm going to say I want this one only. So it says 7 o'clock up, 7 a.m. up. So here's what I'm going to do. I'm going to go ahead and set up a separate trade. All right, I'm going to show you guys what I'm going to do. Let's go and run a back test. So we want Tuesday, and I'm going to use one of the new features, the market condition. Okay, so as I've said in other videos, I take the first half hour. Okay, some people are taking the first 15 minutes. Okay, so they're dividing it by 4 as opposed to dividing it by 2. That initial hour, that's up to you. So I'm going to put 7:30, and since it was up, I'm going to put long. Okay. I'm going to come down here. I'm going to definitely use market conditions, which is why I'm doing this demo for you. I'm going to look at the last, so the higher time frame is going to be the 30-minute chart, and I want all of them, everything except counter trend. Okay, that means the counter trend means that price is going down at that time. Okay, that's what that means. So if you're looking for a potential long trade, if I was setting this up, if I was going to select counter trend, that means I am looking for price to go down. And that's not what I'm looking for. There are times you might want to do that. Okay, there are times that you want to look for a counter trend. For example, if you set this up so that there is a minimum 400 tick range and a maximum 800 tick range, okay, something like that on the market range, and it's been going down and it's been going down a lot, then one can assume, or one can, I guess, speculate is the right word, that price may reverse itself. Because what happens when price takes a significant dip? What happens in the markets that we've been experiencing these last couple of years at least? People buy the dip, and so you want to potentially take advantage of that. Okay, but let's focus on what I'm doing here. So that's what I'm going to do there. I'm not going to do market range for right now. I'm going to choose, obviously, the AI trend predictor because that's what we just ran. And this essentially is, and I've said this in other videos as well, the AI trend predictor is just, if you're for a long trade, it's looking for a green bar followed by a red bar. That's all it is. So for a long trade, because the strategy is essentially based on AI trend predictor. Okay, so this is just looking for long trades. It's looking for a green bar followed by a red bar. For short trades, it's looking for a red bar followed by a green bar. So it's counterintuitive, okay? But that's what I'm selecting. And let's see, everything else I'm pretty much not going to touch. Actually, I am going to touch the money management part. I just want to do one trade, okay? And I'm just going to put for consecutive loss switch since it's only one trade anyway. So this number is not going to make a difference, but just so that I'm clear on this, I'm only looking for a single trade, okay? And let's be tight on this. So 30 tick profit target, 15 tick stop, okay? And that was for the next Tuesday. But I'm going to run this thing on every Tuesday, okay? Just so you see how this thing works, okay? So let's go ahead and be really tight here. And let's say $100. Trail it by 10%. Now, if you are an independent trader of any kind, you're trading futures, you're on NinjaTrader, okay? If you're using any trailing stop that is using essentially NinjaTrader's trailing stop, okay? Even though NinjaTrader, in my opinion, is the best platform for futures trading, the trailing stop cannot be granular that way. You cannot predetermine in the native trailing stop that is available in NinjaTrader or any strategy that is using their trailing stop, an automated strategy of any kind that is using their trailing stop, that's not using custom logic like I'm using, a custom trailing stop that I'm using, but they're using the native one. Well, how are you going to determine the exact percentage that you have to be away from that unrealized peak price? You can't, because it's doing it in the native trailing stop with for NinjaTrader with ticks. Okay, so you can't predetermine how far it must be from the unrealized peak in terms of a percentage, in terms of an actual percent away from that unrealized peak price. You can in AITPPropTrader, okay? So I'm saying essentially if there is $100 or more in unrealized peak profit, trail it by 10%. That's a very, very tight trail. And because there's a tick value here, it's $12.50 for the spoos. So it gets rounded. If it doesn't get exactly to that number, then it's going to be rounded, okay? So let's pick the spoos. All right, and let's make sure we have some slippage. So now let's review the parameters. Anytime you do a setup, guys, when you're setting this up on a chart, always review it, okay? Make sure that all of the items that you wanted, all of the features that you wanted are selected properly, okay? For example, I want you to pay close attention. This is use market conditions short, okay? So if you don't select this, it doesn't get used. Okay, so even if you have a number here and you've selected all of these, okay, but you didn't select this, it's not going to be used. So make sure you select it if that's what you want, okay? Since we're not looking for short trades, we're only looking for 7 is up, so we're only looking for long trades. So we're not going to be using it, but I am using the use market conditions long, okay? So let's review. Everything is according to what we want. And so far, so good. Let's take a look at money management. That's fine. All right, everything looks good. So I'm going to run it for this whole year, and we have slippage, okay? Let's see what we get. So I'm going to run it like this with using market conditions, and then I'm going to run it without it, okay? Just so that I give you guys a clear demonstration as to what the new feature within V4, version 4 of AITPPropTrader is doing for you. And here are the hypothetical results. Just to review the parameters again so you see them. There they are. Okay. It took 17 trades within 30 minutes. So it's essentially looking for trades between 7 and 7:30 on Tuesday only. It was looking for the AI trend predictor strategy, and it required that the market conditions be checked as well prior to entry. So it's looking at the 30-minute chart, and it's looking for either a bullish, a sideways, or a volatile long setup. If it doesn't get one of these three, it's going to not take the trade. So this is what we have. Please remember this, okay? Remember these numbers. This is what we have. Remember this max drawdown. Remember this total net profit, etc. Remember all this data. I'm going to deselect this. I'm going to unselect it, okay? It's gone. I'm going to run it again. So now we're not using market conditions. Everything else is the same. Nothing has changed, okay? It's all the same. I'm going to run it again. And here are the results. So with market conditions selected, we previously had in the previous back test that I just ran, 17 trades. It was 70.50%, if I recall correctly, on the percent profitable. It was far less max drawdown. and it had a higher total net profit. All of the parameters are exactly the same, with the exception of choose market conditions. It's now not selected. In the previous example, in the previous back test, it was selected. And so in this hypothetical back test, you see the difference. Okay? So you had less trades, and in my opinion, you had better quality trades. Okay? You filtered out, in essence, the bad trades. So that's why I wanted to show you this. And remember, guys, for all of these hypothetical back tests that I ran, even though I included slippage in all of them, I did not include commissions. And the reason I don't ever include commissions in any of my videos is because I don't know how much you're paying. I don't know who your broker is. So whatever number you see, multiply that number. If you're paying $5, let's assume you're paying over $150. You're paying $165 here, okay, in this example, for just commissions. Okay, so just remember that. Do your own calculations. Okay, I'm not trying to hide anything. I just don't, and I've said this in other videos as well, I don't include that because some people are paying less than $4, and some people, depending on who they're with, if they're with a large broker, they could be paying as much as $7 for their commissions, for their trades. So it all depends. That's what I wanted to show you guys. If you have any questions on how any of this works, if you'd like to have a Zoom demonstration so that I can cover everything with a much greater detail for you and we can spend more time discussing things, let me know. Fill out the form on the website and we'll take it from there. Until next time, take care of yourselves and God bless.